Good afternoon, everybody, and surprise, it's me, Random Task, here for a stand-in for the network effect today. We had some trouble patching Gunny and Rob in at the last minute, and rather than just cancel and let everybody go home, I'm here. I've scheduled my day around being live. Let's just go live. We'll just talk. I got a few things I can share with you. Not a whole lot in yeah, I hear breathing. I hope you hear me now, Gear. I was probably just doing that like mouth breather shit into the mic before the show, like get my window set up. But anyways, we're going. Yeah, we'll just do some charts. We'll do like Hxro Labs live style. So that's why I just put on the classic thumbnail right here. So you know what? It's either that or cancel. I'm fucking geared up, ready to go live. So here we are. We're going to talk a little bit about options and derivatives today. We're going to take a look through an excellent guide. You know, we'll just make it like a solo stream episode. Probably got about an hour here, and then I got to get out of here, which was the plan anyways. So without further ado, let's do that. Let's first off, I'm giving some Hxro away. It's not an official giveaway, like, ooh, we passed this with everybody and it's all part of the marketing team and all. I'm literally just a guy on his computer who's like, I like making squigglies. I want to see what you guys think of what's coming up. How are you visualizing the price action on Ethereum into the merge? Am I too bullish? Is this just ridiculous? This is kind of the impression I get when I read Arthur's essay last night, which you haven't read it. I think it's good. I mean, I think it's good analysis. Doesn't mean he'll be right. Doesn't mean that he'll be right. However, I like the way he puts his ideas out there. And, you know, I also half expect... I wouldn't put it past him. He's a very smart man, and I don't mistaken myself into thinking he's my friend. You know, did he put that essay out last night just to like get some overnight exit liquidity, and then this is like the Arthur essay rally, and he got to exit some, and now because he saw the wedge breaking down, or he's hearing about all this on-chain censoring at the protocol level that could be bearish, and he needed an exit, so he made up a quick little buy the dip essay, and he got the fuck out. Who knows? I don't know. I don't think that second one's true. I'd also like to think that he's not petty like that. Seems like a little petty, you know? Maybe he was a really big position. He doesn't care. Either way, I've got an entry into this thing, which is my own contest. So I really just put it out there as a kind of like a example. But I could see something like this. You know, once we broke back into this high time frame range, which you don't see on this chart, the range rather, but this is a big level. This was the level, right? It seems really weird for me to get above that and never retest it. It looks like we're retesting it sometime soon. Breaking down from this little wedge, which is pretty poorly drawn on this chart. Again, some of this stuff just my own drawing. Sometimes I might use the wicks here. For now, I'm using the candle bodies. Find you get a little bit of a stronger signal there, even though I don't trade off these too much. Some of TA is simply looking at what other people are looking at, which is this big wedge that everyone's been talking about. So breaking down from there, I think coming into this support makes a lot of sense. There is the local reload zone. If you want to take this low to this high, that would be right through here. There is a slightly larger sort of pump chaser zone, PCZ, that would fall in that same area, as well as a big node on the VPVR. So I wouldn't be surprised at all to see the low 17 somewhere through this, even if bullish. And then do we rally up into the merge event as all this bullish news? I mean, it's possible. I really liked the idea that Arthur put out there where there's a lot of people hedging. So buying spot, selling futures, trying to capture that free ETHW, potential fork coins, selling those, and then closing their shorts. Their shorts that were covering their spot. So dump the spot, dump the fork coins, but closing their shorts means buying. So maybe there's a little spike up, then a big dump down. I don't know. So I just put this out quick and dirty earlier. I want to know what you guys are thinking. So there's a little giveaway on Twitter. I wrote this up on the whim. So I added a few things later, like deadlines. Obviously, if you enter later, you are going to have a bigger advantage because you've got more price action to work with. So I'm going to cap it at Friday. So make sure you've put something in by Friday. We'll say at the daily close, 8 p.m. Eastern. If you don't have TradingView or whatever, you can just do one for free here on CoinTrader Pro, no problem. And then save the chart though, because after the price action plays out underneath your whatever your squiggly, you got to be able to like post the final version. So save that squiggly. And the deadline Friday, and then we'll just make it up to at least October 1st, which is like all the way over here. So I went a little beyond, but whatever. Anyways, just for fun, 1,000 Hxro to whoever has the squiggly that matches price action best. And what I think would be really funny is if 50 of us did it, everyone with their own reasons why they think that's kind of how it's going to play out, and we're all just completely wrong. That would be fantastic. Anyways, 1,000 Hxro for fun. Yeah. So look, let's see. I mean, this is a bullish outcome. Obviously, I added the end bit too. And then we have, positive reflexivity, but we'll see. Today, we don't have fun price action. We have a nice, solid breakdown. We're getting a reaction here, which is actually a place where I had initially put bids, and then I think I right here, just like this kind of wick high. So in a bull trend, a strong trending bull, and I've seen it on Ethereum a lot last year, it's very hard to get past these throwbacks. You just come down, you tag it, and then you go. And then looking back, you're like, oh, what a perfect, retest. That's just, trading is so easy. In the moment, though, looking through this breakdown, I'm like, I don't feel like that's all we're going to get. So I did cancel the bid I had at like 18.24 for some rebuying on what I sold here. I had actually been loading up here, and then when I woke up this morning and I saw that big spike in rejection, I was like, oh, God, that's not good. That's not looking bullish. That's not what you want to see when you wake up in the morning. Going to bed last night, things starting to take off. I was like, I'll sleep comfy. I'd already picked some up down here. And then woke up basically back at my entry, and then was like, okay, I'm getting the fuck out. And then this little retest and fail, and I sold the rest and thought, okay, I'll buy back. So anyways, that's kind of how I'm playing it throughout this little giveaway for fun. So we've already got some entries. We've got the extremely bearish meat fish. Wants everyone to fall asleep at $400 Ethereum right here. I don't know about that, but it's very possible. Who knows? I think the bear case for me, and we could probably go to like Sassel. We could probably go to his Twitter. He's been kind of following this narrative. There is a very strong and uncomfortable potential bear case for POS Ethereum. And that is to do with the validators on the network. Now, I don't know how this is different with mining versus staking, POS, POW. I'm not very expert in the sort of mining and dev stuff. But I will say this. If OFAC is sanctioning Tornado Cash and they're telling, all these entities like even Aave, right, blocking people from using their DeFi because they're US based, if the validators, let's say Coinbase, for example, you can stake your ETH on Coinbase. They are going to be running validators. If they are told you cannot or you must censor these addresses at the protocol level, and then they do that, then is Ethereum being censored at the protocol level? And I'll point out here a tweet that I saw a few days ago from Sassel, which I thought was interesting. Basically saying, like, let's be clear. I'll just find it. Let's just find it. He tweets a lot, apparently. I don't know how many days ago it was, but he basically said, if Ethereum is getting censored at a protocol level, he's going to chalk it up as a failed experiment and just move on with his life. Get the fuck out of crypto. Oh, it's been fun, and just go about his day. 16th, yeah, it's coming up. So I thought that was like a potential FUD narrative, which frankly, as the price went up and up and up around 2000, I thought it'd be nice to get a FUD narrative. Because if I want to be very clear on this. Because if I'm feeling bullish on ETH and I'm like, ooh, I want to buy more, then I would love to have some pre-merge FUD, some shakeout, some dips. Then I can get a position that I feel comfier with from a level that I feel comfier with. Obviously I love being long from positions of strength, as you guys know. So if I'm like, let's just hide this because we've talked about the contest now. For example, getting long through here, less comfortable, less certain, but much more comfy once you break out. Getting long up here, very uncomfortable, not a position of strength. Getting long back down at this support, relatively more comfortable. And then of course, getting long through anything like this, which actually we have an entry talking about this. Like if we do some kind of dip like that into the merge, and then it's like sellers are exhausted, it's like sell, the news gets front run, and then we actually move up. I don't mind that theory either. Point is, I don't mind if we're going to have some shakeouts here if I can get cheaper Ethereum. point being, it's not a dunk, right? It's like POS, yeah, the merge. Because of that tornado cash, which now seems like interestingly timed, I think there's a very strong case to be made that there could be nodes forced to censor transactions at the protocol level. So that's uncomfortable to think about, but it's something we should consider. Yeah. Hey, August, welcome, brother. Good to see you, man. Walk the world. Appreciate that, dude. I did suit up, and I'm here. And to be honest, Rob and Gunny are ready to go, and they were here too. We just had some tech difficulties. Unfortunately, couldn't get it going, so it's all good. Anyways, yeah. Let's see. There's one here I want to highlight. One entry already that I thought this is actually an analyst from my fund, my little cousin, and he sharp little guy, sharp wee little man, coming up as a software engineer and trader, and he he put this out to play devil's advocate. He's like, I like yours, but this is totally possible. This would be my sweet spot. Can you tell I helped him learn some of his TA? He's also a TRI vet. So yeah, anyways, this is his thinking, and that's totally possible. And that would rinse all of my attempts to buy the dip. I'd probably have to buy and resell like twice because I'm too short term in this. I'm not like, oh, I'm just going to buy here and hold for years. I'm not ready to do that. So we'll see if this one plays out. I actually kind of like this. We'll see. So there's so many ways to skin the cat with the merge. I think having a plan is important. I think having a pain tolerance that you can kind of define is important because this wedge breakdown could be nasty. All my little invisible lines here that invisible to the naked eye, they could just disappear. But on a daily perspective, we're not really bearish at all. These EMAs, the 12 and 26, that's something Gunny put me on. I think it's more of like from the TradFi world, these are some important EMAs that people like to watch just to get base kind of trend analysis. And when you're in a bull trend, as you can see, buying along this 12 has all paid off every single time so far for ETH just recently. Selling against that, also working in the bear trend. So we are in a bullish trend on the daily. That has not changed. Today's price action does not change that. So just keeping that in mind. Here, obviously, on bear day, after the breakdown, talking about some bearish scenarios, but Arthur's article last night pointing out some very bullish scenarios, which are that the emissions are going to drop significantly from something like 13,000 Ethereum per day or whatever it is, 13, 16,000, all the way down to like 1 or 2,000. And then on top of that, you have the burnt fees. So if the burnt fees are greater than the new emissions, you have a deflationary asset over time that should just be very good. So we'll see. I think the tornado cash, the sanctioning thing really shook people up. So it's going to be crazy price action. I'll tell you that. And I mean, we are trading against everyone right now in the sense that, it's not some shit coin where you can kind of have your way with it. And there's not too many advanced traders and algos running. I mean, ETH right now is in full manipulation mode, let's like, the whales are here to play. It's like the Super Bowl trading right now. You're up against it. So it's not going to be easy to call it. It's not going to be easy to say, oh yeah, I'll just buy, and then right before the merge, I'm just going to sell everything. It'll be sell the news, and I'll just buy back later. Maybe, but my guess is there's going to be some serious games played on the way in here to make it difficult. And so less is probably more when it comes to actually trading it. Let's take a look at some coins. I think ETH obviously driving this market. So if it does have more rainy days, I can imagine just about everything else that's been rallying has been an echo of that. Let's go take a look at some of those. I think LDO is probably its number one echo right now. Looking decent, starting to get a little tired. I bet the Momos are starting to roll over. Yeah. In fact, we just had a confirmation of a bearish sort of divergence. So keeping an eye on that. This thing looks pretty tired too. Now, let's take a look at Solana, and I'm going to point out why, just because it's a chart I've been paying attention to. I just want you guys to remember that this is the big picture right now. I don't know why we're going to pick Solana, but we are. Just because I was looking at it yesterday. Now, just as a general market rule, right, you get some pretty fast ups. Typically, you get even faster downs, right? Stay your way up, and then like elevator down. But in between that and the next move or the next cycle, you get a lot of this. And so keep in mind that we are likely, very likely, overwhelming probability heading into something like that across the board. And so when you get these counter trend rallies like we've been enjoying, I think I could just get like a different chart. I don't want to mess that one up. Oh, that one too. Okay, let's go. Let's go Coinbase. I can mess that chart up. So let's just say Ethereum. It's actually a much better example. Solana was a little too steep and a little weird. Let's go to a weekly. So, case in point, really nice example here of what I was just talking about. Actually, that's so similar to Solana, right? We had the up, the slow sideways, and then the big up. Then you just get that sharp drop down, and then it's just sideways. Boring. Not really doing anything. Shaking everybody out, getting rid of all the sellers. You can't go up until the sellers are gone, right? If you're going to sell, you end up selling. If you're not somebody who's ever going to sell, well, price can't go down anymore. So we're out of sellers. We start to build back up. Ooh, the buyers, some people say made some money. So they tell their friends, and then their friends come and they made some money. So then they start telling them, now we have a public mania. The news is talking about, oh my God, Kramer said we're going to 50K. That's the top. And now we're coming back down. So is this a place where I want to be thinking generally like, get all my money in there because we're just going to go straight up post-merge? Not really. And if that flies in the face of that previous chart I showed you, just remember, I'm making this up as I go along. Some of this analysis is things I'm doing live with you right here. Not making up these concepts, just, coming up with ideas as we go. So realistically, after you get this big up, big down, you're just going to have a period of consolidation. And that, whatever that looks like. Does that look like we come up here? I love this level. I think 25 in and around the merge or following shortly after seems very probable to me. But how does it all look 2 years from now, if and when we make new highs, whenever that is, maybe by March, who knows? How does it all look, right? My guess is it's going to look something like this. I think more bullish than that because there's a lot more built on Ethereum right now. The merge, what was it, EIP 1559 last year. There's changes. There's fundamental shifts that should affect this. And so we maybe don't get that pure dead flat line quite like we did. But just keep in mind, guys, that I guess the best way to put it, and I was talking to somebody about this earlier today, is like easy mode will come back from some level at some point, right? So even if, I'm going to pick on ETH here, even if it's like, oh my God, everything's so bearish and nothing goes well and they're censoring it at the protocol level and whatever happens, right? There's bearish market, we go lows, S&P, everything's crashing. Oh my God. At some point, we end up with no more sellers and we start to build a base and we start to break out and the buy volume comes back. Maybe not in ETH. Maybe the censorship at protocol level kills it, but somewhere on some asset someday we get easy mode. And so the point is, like, can I be patient enough to wait for these kinds of moments, to wait for that buy volume to come back? Now, I want to trade this. I'm a trader. I do this show. I come on here every week. I'm in the driver's seat at my desk every day. I am not going to sit there and not trade. But I'm certainly not taking on the size and the risk that I was through the bull. And I am trying to be aware of this and trying to make sure I remember this so that when this day comes, I have as much possible capital at my disposal. Does that make sense? So just keep that in mind, guys, because this is going to be a long year. It has been a long year. It's going to be a long end of the year. Next year could be a long year. We could go into some global depression. Who the fuck knows? But just being aware that there are going to be telltale signs of when, quote unquote, easy mode is back. The psychology of that moment will be disbelief. We'll be like, oh my God, we can't possibly go up. But the signs will be there, right? The rising buy volume, the things that signaled us last time, maybe like this, right? And those are moments when I'm going to possibly look back at all of this, whatever we get here, and just kind of like, I hope I don't have any regrets. Like, oh man, I blew all this money. I wasted all this time. I got so stressed. And I should have just maybe been parking it. I used to say parking it in some low risk yield strategies, but after the big C-Fly implosion, I don't even feel safe over there. This market, never a dull moment. So Yeah. Just be aware, guys. Cycles, hard ups, hard downs, sideways. Typically what we're going to get. So I wouldn't try to overtrade this phase. Now, the most beautiful thing you can have, starting from high time frames, typically a good idea. I mean, this is the ultimate setup for, okay, when is it time for me to start thinking about the next bull market? And the sort of the holy grail from TRI is the weekly Ws. So that would be the midpoint if we just come down from here. Any kind of higher low, whether that's the PCZ right there, whether we go even lower into the reload zone, which is typical, and then once we break that midpoint, if we do, that's the signal that this whole structure has reset and we're ready for more upside. And actually the best part is after that signal, you can usually buy even on the next dip. So keeping an eye on weekly Ws is like the simplest kind of idea that I've ever been taught, and it's super effective. It means missing a lot of things, right? This rally up has been a lot of fun. A lot of people made some money. You would have missed that if you were waiting on weekly Ws because it's not there yet. But for anyone who's feeling like they're being driven a little insane right now and they just want to find like an easy way, even if it's, it's not easy, but it's simple. You just wait for a low, lower high, whatever that's going to be coming down, but a higher low in between and then a higher high. Wait for that formation to come in on a weekly chart and then even wait for the next higher low for the actual entry. And that's like the simplest way to attack a market. From a long-term kind of high time frame trade. That's it. And however that looks, wherever it plays out, we'll be watching for it. It's not even close right now. It's months away at best. So that's probably like the calm, cool, easy mode suggestion I can make that I should even follow. But like I said, I'm here and trading all the time. So I do get a little more active than that, even though I think I'll look back like whatever it is, a year, 2 years, 4 months, hopefully 2 months, whenever the bull returns, and it'll be like, oh man, I can't believe all that time I spent chopping myself up and getting stressed and in and out. And, now easy mode's back. How sweet it is. I have no doubt in my mind. There should always be some doubt, but I really have no doubt that someday from some level we'll get back in easy mode. What else do you guys want to talk about over there? I wasn't expecting to go full Rambo solo today, so I don't have a ton of stuff, off the top of my head. So for fear of rambling about Ethereum all day, let's take a look at the chat. Randomtask, you were looking for an intern? Sorry to be repetitive. You don't. Tom Skinner, I appreciate that. I'm not right this minute. In fact, at my fund, which you follow me on Twitter, it's Magnus Capital. We just brought in a couple interns, sort of through word of mouth. We weren't putting out like an ad or inviting or hiring or even really, frankly, looking. But my little cousin I mentioned is, studying software engineering, and there's a few guys over there that he works with, goes to school with, that are sharp, and they're getting into crypto and they're learning all this stuff. And so I said, hey, we'll bring you guys on. We'll do a little internship. And so we do have like a little team of interns right now. So if you guys are watching, what's up? I appreciate you. And we're putting out some more research reports and all that stuff and all those things they're doing. So we're not actively looking, Tom Skinner, but I appreciate you, and the future is friendly, especially for people like you who come out and just ask straight up for the things that they want in life. So short-term no, long-term maybe. Let's put it that way. Kilt chart looks great. Let's take a look at Kilt. Yeah, we'll just poke around at some charts, guys. I don't think there's going to be much juice in the market without. Yeah, so like this is the kind of thing. I agree with you. Like, yeah, then people say this looks good. No, it doesn't. It looks terrible. But we're not looking for bull markets. We're looking for things that are ready to stop being bear markets, right? When I look to invest, when I want to take a long position in something for the mid-term, even long-term swing, this is the kind of chart I look for. Mostly what I'm focused on, there's two things really. Location, so obviously being way down in a range, 52-week low kind of stuff. Like to see volume at those lows to show that some big buyers are stepping in to protect that level. So we're starting to see some buyers come into control. It is still like a declining volume, so maybe not done yet. And then, of course, you want to see the market structure like we talked about, right? The W's. It's kind of like what we just saw there. It's a little bit shitty line there, but you can sort of see the midpoint Stretch it out. Wow, that was zoomed in. That was a really shitty line. But it's this kind of thing, right? So yeah, that's the idea. Low, higher low, breakout, retest, and look, the buyer stepped in. Now, that's not a buy for me at this level from here in this kind of market state, but this absolutely is the kind of idea that I like to look at when I'm looking to buy stuff. What are some other ones? I mean, Fold's coming off a bit right now, which is kind of to be expected because it had a pretty decent, like, multi 100% straight shot. It's a lower liquidity, right? It's only 1.1 mil. Big breakout last year, late 2021, and just nothing but sideways and down. And then it did the same thing. You can see right here, right? The low, the higher low. Wow. Okay. Magnet's messing with me. You know, the breakout and then even the retest and then just launched. So this one, getting up into the short reload zone, running out of buyers, running into sellers, and now looking for buyers again. Probably, if I had to be a guessing man, actually it might be in the PCZ right now. I don't have my like templates here. Yeah. So it's actually at the 385 or 382, excuse me. So typically in a very strong bull, this is the first place where I'd be looking to get an entry. But given ETH and everything else, and if we're going to go into the merge with a lot of uncertainty around censorship on chain, blah, 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 I do think that narrative is going to heat up, and I do think it's something to pay attention to. So this level is not out of the question either. And that's a sweet level, right? We've got some lows over here acting as support, resistance here, sort of right in that sweet spot, 702 reload zone. So like the mid, low, mid, high 20s, whatever you want to say, in and around those ranges, I think would be a gift for Manifold. And so that'll be a place that I'm paying close attention to. For now, we're just kind of in no man's land according to the fibs. But we are right at the 382. So that should be first touch. Lower volume on that push to the highs. So yeah, I don't know. Looks exhausted for now, which is fine. I'm in it for the long haul, baby. Really been holding it for like 2 years already. So actually like a year. Feels like 2 years. Yeah, so Nico says, curious how you choose to decide whether to use the wick or the open close when setting up your pump chaser zones, your chaos, PRZs, all that stuff. Let's discuss. Which chart shall we discuss on? Let's just say Bitcoin, the classic. One that I haven't talked about enough for a while. Bitcoin crossed with Bitcoin, flat line. Okay, so let's just say chaos. Now, chaos PRZ, I typically always choose wicks. So that's right here. Maybe we should use TradingView. But, chaos PRZ, I always choose wicks because you're trying to grab the energy of the entire move, the entire range, and that would have to include the wicks. Now, the reason sometimes wicks can be bad for trend lines especially is because certain exchanges will have little outliers, and that'll change, especially on a trend line, like exponentially, that changes the output. And so typically on trend lines, I actually like to stick to candle bodies. So for those of you who aren't aware, a candle body is where the price opened and closed, and a candle wick or tail represents, where price moved at some point during that candle. So you can draw trend lines either way. Somebody who tells you one's wrong and the other's right doesn't really understand the nature of TA, right? TA is about establishing your own systemic approach to measuring or analyzing the market. So if it works for you and you do it consistently, it's not wrong. It's just your way. So I think the wicks can have value. Sometimes I'll draw them each way and see which one fits the rest of my analysis and be like, wow, or which one's getting the most action, right? In this case, this wick trend line looks beautiful, right? Perfect kiss right up here. You could say, oh, that's pretty valid. You go to the candle body highs. It's actually not too different. It's about the same. So it doesn't really matter. The general rule is you get a stronger signal from candle bodies and you get a weaker signal from candle wicks, or a less reliable signal. So that should answer your question for which one you want to use. But chaos, I always use the wicks within these ranges. There's one exception, I guess, if if I retry it on just the candle bodies and like this lines up so perfectly with like 10 other SR levels, I'm like, oh, like that's going to be a more powerful level, so I'll use that, right? The nice thing, and something you should know, There is correct ways to do things in TA. For example, this is incorrect. Like drawing a fib from, starting here to there, like that's not right. It's just not going to measure what it's meant to measure, right? The point of this tool is to measure the percentage of a move that the market's going to take back. In fact, this isn't even correct because I've missed the entire move. So it's not to say that you can do anything you want in TA and it's correct. It's just when it comes to like drawing trend lines on wicks or candle bodies, you can give yourself a little break there. So let's go here. So in this case, using wicks, which I often do, I'll give you one example actually from yesterday. Dogecoin. Dogecoin had a crazy wick on the weekly. And so I tried writing the fib up, ignoring that to see how it would affect the result. And I decided to ignore it. So I don't know, Nico, there's not really, now that I'm talking through it, I realize there's not really like a clear-cut answer for you as far as this is the way, always. But I guess I can just share how I think about it. All right, so I'm here. It works, right? It's getting some decent play through here, right? Perfect tag, kind of perfect candle body close rejection, bounce, 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 breakdown, retest, tag. So this is getting decent play on the fib. So the wick being in there, it's actually a little off, but right there. That's not bad. And then I redrew it kind of here, just going candle bodies. I have to fix this one. Doge is such a crazy example. Look at that rally. And, I actually decided I like this one a little better in this case. And as you can see, both would serve me well. Right? So you're coming down here, sweet spot, kind of bouncing along here, bounce down, tag the 706, tag that bearish, tag that. Like we get a range here. So it's just way more satisfying. And then seeing it land on the 88.6 to me just made more sense. I liked it more. So in this case, I went with candle body highs. So I hope that makes sense, Nico. It is a long-term study kind of art. Find your own feel. And at the end of the day, what really matters is, does it work for you? Is the analysis you're doing giving you actionable signals, and is the risk reward you're getting on your trades averaging out to profit? Are you making money month over month, year over year? If you are, you're doing well. If you're not, you can circle back to some of these kinds of techniques and ask yourself, what could you do differently? That's why like journaling and tracking is so important, because it's really hard to know what the hell's going on if you're not doing that. Yeah, Kilt is the first project to be live on KSM and DOT now. I do remember hearing about the Kilt raise. I forget what they called those on DOT. But Kilt was hot last year. Hot topic. So it's interesting. I guess now's around the time when some of those, I think, what was it? You like kind of send in KSM and you lock it up and then you get Kilt and then later you get your KSM back anyways. Yeah, I forget what they call those, but okay. Nico says that made a lot of sense. Thank you. Thank you. Thank you. Thought I went off the deep end there. Looking forward to the next bull run. Yeah, hell yeah. Fire up. I like the name too. Get fired up. I'm looking forward to the next bull run too. Look, guys, I think we're closer to the end than the beginning for the bear market, which is exciting. It's easy to look at things like the S&P and there's going to be doomers out there. And just remember, because we are at this trend line resistance on the S&P, which, I saw some stat yesterday that said like there has never been, right here, there's never been a bear market that continued in the S&P in history after the daily closed, or well, it was a daily, weekly, whatever it was, but the weekly, they both closed back above 50%. So there's an indicator yesterday I saw tweeted out that basically said anytime there's like a bear market like this in the S&P, if at any point the price came and closed back above the 50 level, right, and that 50 level obviously moves as price goes down, but in this case, it's here at 4229. Never in history in the S&P has a bear market continued after closing back above the 50 level during the bear, right? It's like it's always gotten rejected before that. And then when it finally closed back above that, it was like marked the end of it. So I thought that was interesting, right? I've also seen stats that said like we've never had a bear market that didn't at least go further than this. So somebody's never has happened is going to break this time. and we're at trendline resistance, and we've had a really nice run. So there should be some relief here into the downside. It does not mean, pure doom. Going back to what we were talking about earlier, thinking about things like weekly W's, you could say, something like this would be making sense into next year, right? Who knows, right? That would be like, this would be like the new year. So do we have something like that? I don't know. I don't chart the S&P because it's not, I don't trade it. But obviously now we have to kind of pay attention to it. But just keeping in mind, if we've had a nice relief rally across the board, that should be coming to an end here, which is part of why I did cut my Ethereum after seeing this little breakdown right here this morning. Added to my conviction of like, ooh, it's probably time for me to trim up a little bit of my exposure. So the funny thing is, I would not be shocked at all. I would be disappointed because I canceled my bid there, so I'd be a little disappointed. But I wouldn't be shocked if like this was our throwback, and we just continue up now, and like forget about this, forget about this, forget about that, like forget about all these little wedges and patterns. It's the bottom line is it's like, oh, there's so many fibs on here. It's like gray. Like the bottom line is we're in a bull trend on the daily. That's just a fact. We're trending up along this 12 EMA. We've just tagged it. We've just had a bullish throwback to the previous wick high. That could be it. That could be the end of this dip, sideways, and continue. I wouldn't be shocked if we saw that. But like I said, I'd be a little sad because I canceled my 1824 bid. But I still have some ETH, just like less. So keep an eye on this. I mean, don't be shocked if in a week or two this looks so painfully obvious in retrospect that this was like the level. And so getting it right, being perfect, making sure you nail it, the more you bet, the bigger size you're trying to take, the more important it is that you nail it. And in fact, even though I don't always do this, what I found to be most effective is taking smaller nibbles. So I say, look, I'm going to buy a little when it hits this EMA. I'm going to buy a little more when it hits this EMA. I'm going to buy a little when it hits this throwback. And so you have all these little TA objectives, which is because that's how I trade. These little TA objectives, you say when it reaches these points, for that reason, I'm going to buy a little more, a little more, a little more. And then it's like, oh, if it loses a key level or if these two EMAs cross bearish like they did back here, then I'm going to cut my position or whatever, have those invalidations. And then that way, if it does dip and go here, I'm not just naked. I didn't just buy nothing because it wasn't perfect. The deeper in it goes, the more I nibbled, the better my position. That's the best way to do it. So as I say that, I'm realizing I should do that. Not cancel my whole bid at that level, but just maybe minimize it and spread it out along a couple others of the objectives. So, I think the censorship stuff will get worked out, but I think it could get really messy. Investors, holders, buyers, they don't like uncertainty. So if these RPCs, suddenly everyone's talking about RPCs and relayers, those who you have to go to get validated transactions, blocks, whatever. I don't know. Frankly, it's all above my head. But if they come out publicly and are saying, yeah, we're going to censor and kind of stand up with these OFAC sanctions because we're in the U.S. or we just don't want the drama, that's going to cause a lot of uncertainty, right? And then if the remaining validators on the network who are going to stay true to that decentralized, uncensorable ethos, they may get together and say, we're going to fork away from you guys. All you censoring Ethereum, RPCs, whatever, we're forking away from you guys. Fork off, buddy. And they just might leave them in the dust. And now you have this debate over where's the most stake, which one's the real Ethereum. I think ethos-wise, it'll be really easy to tell. But then does OFAC and all these authorities go after the people who are in charge of those things? This is the fear. This is the FUD. This is the uncertainty that I sometimes get caught up in. But, that's why I kind of am glued to charts because they don't tell stories. They do tell stories, but they don't make you want to sell things right at these points, right? There's always some friggin' story in the news who's like, oh, things are bad, I should sell. And then there's always some reason here, like narratives in the news is like, oh, so bullish, I should buy. So you're almost on the wrong side of the trade if you follow that kind of talk, Twitter and news and all that shit. I find when I just isolate myself and just like nerd out in front of my charts and don't listen to or talk to anybody, and I just say, there's a buy level. Nice buy level. Sweet buy level. Sweet buy level. And then I just like escape the noise. I'll give you a really nice example. You all want examples, right? Let's talk examples. What was it? Feb 24th. I remember this like it was Christmas morning. It's not a good example. I remember this. It was like clockwork. Perfect example here, guys. The Russian invasion. And all through this, I was like, man, I'm just going to draw my fib and I'm going to get ready to bid and I'm just going to have my bids working and that's going to be my long. And then, of course, the news that drove this was the fear of a Russian invasion. And I still remember that night, I'm sure you guys do too, a lot of fear. You could feel it in your stomach right here into whatever it was, like midnight. What was it? Yeah, 7:23. Like, so this was like right at like 11 midnight local time for me. And I canceled my bids because I was watching all that bullshit, because I was soaked up in the fear, even though it was the narrative or the story that was driving my own setup right into that reload zone. And the reason I like that setup is because I can risk to this low, but my entry is pretty close to that, so I'm not risking a ton of space, and then I'm obviously my upside's pretty good. And let's say it was a 786. I think they were laddered, but yeah, you tell me. Was I going to get 3-1 there? Yeah. By 1 month later, about exactly 1 month later, every one of my take profits would have hit. So that was an example, and that was a wake-up call for me. So maybe I'm just talking my way into not worrying about RPCs and FUD and all this bullshit and just saying, hey, throwback, 12 EMA on the daily, check. These are the reasons why I want to buy a little bit. And that's fine as long as I have reasons why I'm going to sell if I'm wrong, which is days away because we would need these EMAs to cross. And they will cross eventually, right? You missed the top, but if you got out here when they crossed, I would have been pretty happy with my cash through that. And they can chop you up too, right? So don't just trade off EMAs. But anyways, those are all my thoughts. No position. He's looking for the short 200-day SMA to close at Mountain Man. Ooh, fishy. Talking TRI. I like it. Let's take a look at the 200. MA. It's been a while since I've done a solo stream. We're going to say this is a silver lining to today's technical difficulties. That's why I was so crushed. I was sitting here. I saw guys in the YouTube chat, and I was just like, oh man, you guys are ready for a show. I'm geared up, ready for a show. And secretly, I prefer chart type stuff. Network effect, we're going to do it. I love talking about hero stuff. It's Dan and Rob's baby. I'm here like, can I do charts now? And so I'm actually really glad we decided to stick around. So look, that's the 200 day. Is that what you're talking about? Looking to short the 200 day. Yeah. So maybe you're looking at the classic 200 and the 50. So one of our viewers, going by the name Fishy, has a very fishy theory about being a big bear. Okay, just kidding. You can be a bear. Bears make money in the bear. Let's take a look. In fact, I would do well to short once in a while. Jesus. I'm good. I've been pretty good lately at cutting positions. So we'll take the red. We'll close this. I've been pretty good at cutting positions and buying back and saying, ooh, like I reduced my loss. I increased my bag. But I don't make money when I do that because I still have other old bags sitting around that are losing. They're not hedged. So like this morning at the wedge breakdown retest, I cut my ETH, my core ETH position. I should probably like short sometime instead of just cutting that. Okay. Yeah. So we have the dailies here. So yeah, you come down, you lose that 200. We retested it. So we lost 200. We got the bear cross here. Remember everyone talking about the bear cross back then? Oh no, the bear cross. It's all over. Well, they were right. And so you get that bearish retest and you're thinking, hey, when this comes up here, I'm going to short it. It's not a bad play. I like, anyone who says, hey, here's my reasons and I have a plan and this is what I'm waiting for. Go for it. Power to you. And you also have sort of the dump chaser zone starting right there too. Because, yeah, the PCC goes both ways, and that's going to be right here. So there's a few reasons. What is that? 2250. Yep, getting into this kind of big resistance level. So there's a lot of reasons accumulating up here for people to think about cutting longs or opening shorts, blah, blah, blah. So second is short with confidence to get wrecked with some Arthur article drop, Wick, or some BS. Yep. I feel you. I think that's probably why in my brain I'm very quick and easy to cut core spot positions, but very hard to then also open up a short. You know, something about the live P&L too, and I'm just day to day at my desk working, dealing with real life, and like there's just some green and red number flipping around by the second, and it's like I know that that affects me. So that's a big part of why I don't like perps, shorting and long. You know, flipping in and out of spot. The nice thing about perps though is it tracks it for you nicely on FTX, right? You can just click P&L. You're like, oh, look at that. So anyways, the more and more I chart Ethereum today, the more I want to be getting long here. That is all. And that's the show. Ladies and gentlemen, excuse me, I'll be right back. I'm going to go buy the dip. No, but seriously, I will probably look for a lower time frame long here. Just to go with all of what I just described is, you know, averaging in on some of these little technical levels. What's really interesting to me, and we haven't talked about today, is ETH BTC. I mean, look at this thing. I think, you know, all that bear shit aside, all that uncertainty aside, all the censorship and RPCs and, you know, Tornado Cash, OFAC, all that shit aside, objectively, we have a very bullish catalyst coming up. Arthur's not wrong in his writing, and I appreciate how he writes it out. And what we do have is May 2021 all the way to August 2022, so over a year and a quarter, almost a year and a half of like sideways consolidation in like the mother of all altcoin proxies, right? The ETH BTC has been sort of the health of the market, if you will, when it comes to altcoins and all that stuff. And it's really done nothing for a year. It's right where it was pretty much a year ago. And so the ratio between them, you know, ebb and flow, but no significant changes. When this marks up, and I say when because on a purely fundamental level of emissions, I just don't see how ETH takes some ground back now on Bitcoin post-merge in the, you know, months, years, whatever. When this marks up, I'm going to say that again, it's going to be splendiferous. It's going to be great. I'm going to give that a 99.2% chance because I hate 100%ers. It just makes me sound like a clown because nobody knows. But I'm pretty fucking sure that this is going to mark up. And, you know, and whether it has to just keep doing this for another year, who knows? But like, I just don't see Bitcoin outpacing it. I just don't. There's just not enough going on over there. And so what you have is these, like, you could say, oh, we got a big fib extension. We got a fib 2 extension. We could grab the chaos from the entire thing. That's a very aggressive chaos PRZ. That's like the crazy one. That would actually be a flippening. I'm pretty sure ETH flips Bitcoin somewhere in the high teens, like 0.18. I don't actually know. If somebody knows in the chat, hit me up. Ooh, Fed minutes in 3 minutes. Oh, that's right now because I didn't look at the chat. Let's go see. Oh, shit. Is it going to friggin' moon? Oh, I thought that too. I was like, yo, these Fed minutes are going to hit. And that's just going to be some stupid little reason why suddenly like everything starts going back again. Whereas this was all just like, you know, and we kind of saw that here where the market just chilled and waited. And then as soon as whatever it was last week, FOMC, and then like regardless of the outcome of that, it was like, okay, we can go back to business as usual. And then it's like, ooh, chill. There's something going on in the macro world. And then as soon as it passes, we go again. So we're coming into what will be a bearish retest. So the real test. So yeah, we got the FOMC minutes, which is a hilarious thing for people to wait for, but I get it. It's like they have a meeting, and then a couple weeks later they release what they talked about at the meeting for everyone to read. And it becomes this catalyst because it's fucking summer doldrums. People are bored. There's nothing to do, right? The merge is all we've got, and it's not nothing. But, you know, friggin' Congress is closed, all this shit. Anyways, summer doldrums. Wall Street's out in the, what do you call them? The Hamptons? just chilling. So there's less volume, blah, blah, blah. Anyways, that's what the summer doldrums are. So here's your bearish retest. It's not a great look from this view all of a sudden, right? You've got your kind of M top looking shit right here. And we broke down and we closed. So this retest actually is not a place to suddenly say, la, 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 la. You see how this whole episode could be summed up as like, watch what analysis paralysis looks like, right? Because on the daily, I just went through all these reasons why, like, oh yeah, we're in a daily bull trend, and here's my 12 EMA, and we're just going to do this. And then you zoom in here, and you're like, oh well, we've got a bearish market structure top and a bearish retest, and there's no buy volume up here to be found, so the bears are here and they're in control. So what do you do? Probably sit on my hands. It's going to be a battle here. You know, we get the bullish throwback here, front run actually by a few pips, and then back up, bearish retest here. And so it just is like, okay, at some point, some level is going to break significantly. But on the 1 hour, even the 4 hour, this is just not a place to suddenly become a bull. And what would be really savage is if all those people who trade like that and say, oh, bearish market structure confirmed, short, 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 get out, get out, get out, and then we just like reclaim it and go. And that happens a lot. It happens a lot in the bull. It's pretty sick. You know, it kind of happened right here, where we had sort of a high, and then we had a lower high, and then we broke that midpoint. We shook everybody out, and then we just nuked them. There's no sure bets here, folks. That's why betting small and consistent levels and rules and all that are so important. Anyways, yeah, 4 hours starting to roll over on that. So yeah, I'm not excited from this view to rush in and buy this resistance. Hell no. It's the highest risk. That's the highest risk buy since buying this $2,000 breakout that came on like no volume. You can see there. I'm pointing to the screen as if you can see that, but you can see, can you see that? Yeah. There was no buyers up there. So even though on the weekend this looks really cool, you look down at the volume and say, holy shit, there was nothing behind that. That was friggin' vapor. And sure enough, next candle bearish, and then just, so, yeah. Exactly what I'm going to do once we get off this stream, not even God knows. There might be a little nibble based on that daily EMA. There might even be a little short setup, but mostly it's just going to be patience. Because I have to remind myself, like I've said today, there's no reason that I have to trade this at all. If I don't have a clear-cut setup that I absolutely love, I don't have to trade it. Cash, while it is melting away at an astounding rate, what is it, 9.1% per year now? It's still much more stable than the rest of this shit. So, how's our fear and greed doing? We still haven't tagged greed. I think we did tickle neutral for 1 day last week. It was on here the other day. Right up here. 47, which is neutral. So we haven't come into greed. We're still in fear, which makes sense. You can feel the fear. Yeah, there's no reason to think this has to go any higher. But it could. So I'm really excited to see this contest play out. I really want to see these ideas come in, right? It's kind of a sobering thing for me too, because I mean, I look at this and I'm like, I read Arthur's article, and I think this basically is what he's describing, is buy the dip, volatility through the merge, and then trickle up afterwards. I realized as I drew that it's entirely influenced by his thesis, which I've been holding on to because I like it. But there's no reason why like Meatfish McBear can't be correct with his crazy thing. But there's some really interesting ideas floating in. I'm excited to see it play out. I love drawing squigglies and then watching them come in. So to have maybe 50 entries to kind of watch and then see everyone post the updates on October 1st, that should be juicy and fun. So be sure to enter that by Friday at the daily close. Gives you 2 days of edge over me because I had to draw mine yesterday. Stargate Finance. Yeah, let's take a look. STG. Actually, we can do that over here. I guess 1.2 is the best liquidity. Let's check it out over on Trader Joe. Yeah, so STG actually had a nice little wake up. I was charting it a little bit. Not great right now. It's looking for new lows. This is what we will call the Trabuco level. I did, in fact, buy all of the STG in the first block. So that's their entry, and I think that's kind of on the radars of a lot of people who were just saying, you know, there should be a very big, hungry bid down there for that because that's just where people know the whales got in, so to speak. This has been a huge disappointment, I think, short-term, mid-term for a lot of people. It's not a surprise. It shouldn't be. I mean, have you seen this chart pattern anywhere before? Every single new coin launched almost ever. So keep that in mind. This is not unique to STG. It does not signal that they will not be successful in the long run or that they're not trying. It's simply the way she goes. Obviously launching in April, right before the major part. Remember, we had a market-wide rally through this, and it was really the meat of the bear that kicked off. But I'll tell you what, there's a lot of like no bid projects out there. This one has a pretty significant bid on in the sense that it's trying to bottom out here. It failed. We just made a new low today or yesterday. But it's got bids, and I'm sure, I mean, I'm still holding a bag. This was my best trade of the year when I made it, right? I was actually on a flight to Barcelona for the AVAX conference, and I saw it going live, and I was like, oh yeah, Stargate, dope. And I bought a bunch, and then I did manage to sell some through here, and I was like, okay, I'm going to wait. And I bought back a little too soon, like in my reload zones, and didn't really pay attention after that. So that part is underwater, probably losing 1/5 of what I made on the first trade. So giving some back to the market, which is often the way it goes. But I'm holding it now. I mean, I'm certainly not selling it now. I like Primo. I like the founder. I think the team is great, and I don't think they're going anywhere. I think they got long-term ambitions. So that's my thoughts on this. So this is a perfect example of why waiting for weekly W's is good. Because what I did, buying in the reload zone, part of me was like, okay, well, I sold it around 380. So if I buy back at $1, like it's already a win. It's like, yeah, kind of, except for what could I have done with that capital in the meantime, waiting for weekly W's, because they're not here yet. Let's go to the weekly. I mean, we don't have anything. In fact, we just put in a bid to make a weekly W, right? We had a low. Ooh, we had a nice, but we didn't make the higher low. We failed. And so now we've got another few months at least to wait for a possible another weekly W, because what I did learn too is if this happens, it's not really a weekly W because this was a lower low. If it is, it's a weak one. And sometimes that is how the bottom looks, and you're like, oh shit, I missed it because of that. But typically you can just wait for a higher right shoulder, and then you say, oh, that's your weekly W. So this is a really good example of where that weekly W stuff would have saved me some money, because the bag I bought back, I think actually even higher, some of it. Again, simply because I had taken the profit higher. Yeah, so like I think I started buying back at like the start of the reload zone, 211, added a little more at the 88.6, and then now it's like, oh God. So these things can go down further than you wanted to for longer than you wanted to. So that weekly W is really nice strategy because it's almost like you're waiting to confirm it's done. And not only done going down, but possibly ready to go back up. I would say like Q1, Q2 next year, we should see a much more pronounced bottom formation on STG. And that's where I'm going to look to add to the bag, my sad bag, my bag that is now sad, because I bought it early and I didn't sell it at invalidation. But fundamentally, I'm not too worried about this one longer term. The question for me is like, is the team still building? Are they still around? STG, obviously a big resounding yes. There are things that I picked up through last year that are still sitting somewhere in my dusty old port where like the teams are literally gone. And the bag is worth maybe like $200. And I'm like, ugh. So like just for my accountant's sake, get it off the books. I'll probably sell those into December, but they're just not going to come back. This one, not so much. All bridges have gone to hell. Yeah, getting hacked every month probably doesn't help. Yeah. Look, let's look at Multi, because Multi was getting a nice bid sometime recently, wasn't it? It was pretty nice. And I think that's kind of where STG picked up a little bit in the last few weeks. Yeah, see, like Multi's not dead. Multi's another big bridge. Probably the most, I don't know, highest volume one, the most volume one right now. Is it 211? Yeah, I'm going to head out soon. But let's stick around for Synapse. A couple more minutes here. Synapse is another one. This is a bag I have. Again, bought it kind of like, ooh, we might even see on here. Yeah, oof. So I actually bought this here because it you know, there was reasons at the time, and it's like support level here, and it had just broken out of this triangle. I was like, oh, it's like a nice level. And then the market nuked into May, and I didn't get out because it's on a DEX, and I don't use stop losses on there because that sucks. Anyways, it's kind of crawling back into that reload zone, so it is in an area where I might just double down and, you know, waiting for that weekly W for sure now. There's no reason for me talking all this shit to then go and, you know, re-expose myself to stuff unnecessarily. Because now it is really about that. I think there's going to be some really sick opportunities in the next, you know, whatever it is, through this next part of the cycle where you just have what we call the washing machine, where it's just ding, 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 ding. And it just drives you nuts, right? You have 5-week rallies. Oh, the bear market's over. And then 5-week dumps. Like, I've been scammed again. 5-week rallies, right? So you get these like month swings. But in the end, this is the kind of bag, because it's on a DEX, I don't use stop losses. I'm not actively trading it, but I want exposure to interoperability as a sector. And so I really should be waiting for these weekly W's to confirm. And then if it does, I can buy the higher low after that. It's kind of my thinking here. So, and the nice thing is, because I do hold some of this now, but as a general rule, just say I'm approaching this chart for the first time. The nice thing about that strategy is I don't give a fuck how long it takes or what it does in between. I don't care if it makes new lows, because, I mean, I might care if it goes below zero, because that means we're in the twilight zone, but, you know, I don't really care what it does in between. There's no stress. You're not watching the market every day saying, oh, I hope. When you do this kind of approach, you just don't have to care. You can kind of enjoy your life and then have some alerts, which at this case, my alert would be at 162, because that would mark a new high. Now, if it goes there this week, that's not a weekly W, but if we come down for a few reds here, a close back above 162, that would confirm the weekly W. And then I can freak out and start planning to buy the dip, not just buy that breakout. Sometimes you can and you get lucky, but more often than not, like much, much more often than not, it's after the confirmation that you can, you know, draw a fib, and then it's that fib of that, you know, and then you can sit there. So I guess the takeaway today for me is, in altcoin town especially, I want weekly W's. Things like ETH and Bitcoin, I can play the range. I can play things like, if this breaks out, oh my God, we're just going to have a melt fest. Maybe not versus USD, but versus Bitcoin, we're going to have a melt fest. Some alts will most certainly be echoing and breaking out, and I bet that would coincide with a big fat breakdown to all-time lows in Bitcoin dominance, which seems inevitable at this point. If you paid attention to what we were talking about last year at all, this consolidation range I'm pretty impressed with. Back when I used to do the newsletters for Hxro, which was like, I don't even know. It's on our old website some long while ago, probably a year. Well, I guess right here, like, yeah, May 2021. So a year and a bit. I drew this range thinking like, oh, from here to here, okay, that's a range. We'll just probably be chilling in there for a while. And I can't believe it's been the way it's played out. It's kind of crazy. I mean, not crazy in the sense I didn't expect it. I did, but I did. You know, you write these things because you expect it to happen, and then it's always kind of funny when it happens. So we're just stuck here. This is going to mirror this. Whoops. Right? That lows are going to mirror these highs. And if this thing breaks, ooh, buddy, watch out. So it could still be months away, but that's probably the most exciting thing I see in the market right now, is the potential for this range to break out to the upside. And if Bitcoin goes into negative price discovery, like altcoins versus Bitcoin should go crazy. And as long as Bitcoin's doing anything but absolutely falling off a cliff versus USD, we should all get to enjoy a really fun, nice seasonal rally. That's about all I got for today. On the whole, I mean, nothing's changed for me. I think crypto has an incredible amount of developers, smart, ambitious, talented people who are all pouring into this crypto space because they see promise. Perhaps they see promise for their own personal enrichment, and that's like, but they also see potential for tech to change the world for the better, hopefully. And with that kind of sweat equity being poured into this space and that kind of capital coming in to support it, and the kind of innovations we're seeing that I think are a market improvement on the current regime, I think it's very hard to believe that we don't see some significant upside in the coming years. That's sort of, nothing's changed there for anyone, if you were wondering. I don't know. Let's see, total too. So I look at this. This is actually excluding Bitcoin. So this is like just the altcoin market cap. But you think about Ethereum and everything but Bitcoin. 650 billion? That's like less than one stock in one market, in one country in the world. And all of that sweat equity, all those people, all that capital, all that effort, and all that innovation, to me, it seems undervalued. That's my underlying thesis. That has not changed. In fact, it kind of just grows stronger. Like with Rob talking about Bitcoin and all this macro stuff and all this inflation. He's like, dude, this is Bitcoin's thesis coming to reality, coming to fruition. So he becomes more bullish the further into this shit we get. And in many ways, I do too. So it's really just about managing risk, having a fucking plan, an approach, and managing expectations is another big one, maybe underrated. Managing expectations so that we don't get too stressed and beat ourselves up and ruin our days and try too hard to make it too fast, and then you just let the market come to you. So I'm like setting myself up for the closing line right now. Always play. But yeah, seriously, like that's it. So, in a weird, gross way, this is a sick level. Don't be surprised if it hits someday, post-merge, pre-merge, whatever it is. I know there's a few entries on the squiggly line that say we're going to come all the way back down there. Would that ruin you? Would that delete you from the market and make it so you can't go play that game tomorrow to be a big part of whatever this looks like? Up and to the right, hopefully. If the answer is yes, and this would wreck you, you got to reconsider your positioning. I would hate to go down here. Short term, I'd be like, oh, that's uncomfortable. This is depressing. But once we're down here, start Wing out, buy volume starts pouring in, fucking better believe I'll be there getting long with the cash I've saved. But alas, we're one level at a time. So this has been my verbal diarrhea. I hope you have enjoyed. We're going to go back to the studio here, guys. So sorry that we had the technical difficulties today. As a Canadian resident, I feel obligated to say sorry. But we did run into those tech difficulties today. Oh, no. I just saw Gunny asked if he wanted to, looks like he fixed his thing. Could have popped in, but I only saw it now. Sorry, dude. That was an hour ago. Anyhow, we're going to get back on here with the network effect. More of those updates for Hxro. I am giving away Hxro tokens unofficially. It's not an official Hxro sanctioned event. It is literally just out of my wallet to yours. If you can draw the most accurate squiggly for ETH price action from Friday until October 1st, just for fun, just shitpost, throw one out there. It's free. It's easy. You don't even have to like or follow or retweet. I didn't even say those things in the little contest. We should have done that, but I need friends. I don't know. I don't really care about followers, as you guys know. I'm just here to have a good time and share what I know and help you guys out because it makes me feel good, frankly. And it's good energy in the world. So let's get this going. Jump on in here. I'm looking at it right now as if you are too, because I forgot I switched back. Oh, no. Anyways, yeah, here's all the entries so far. But you should retweet it because then more people can enter and make it less likely for you to win. Oh, damn it. That's why you have to make it a requirement. Oh, well, maybe on the next contest we'll have it all figured out. Guys, thank you all again for your time today, coming to hang out. And we'll be back with the full squad for DeltaFi, I think actually tomorrow. So that's kind of cool. You're not going to miss us for long. But whatever you do from now until then,